In recent years, institutional interest in cryptocurrency has surged, raising questions about why large investors are entering the market now. Understanding the motivations behind this influx is crucial for anyone navigating crypto markets. Institutions bring capital, stability, and credibility, but they also influence price dynamics and market behavior. In this video, we will explore the real reasons institutions are buying crypto, including hedging against inflation, diversifying portfolios, accessing new technology, and capitalizing on long-term growth trends. Awareness of these factors provides insight into market movements and prepares participants to make informed decisions. Press the subscribe button and hit the notification bell to stay updated with responsible cryptocurrency strategies. Knowledge of institutional activity offers both strategic perspective and practical guidance for individual investors. Let us begin by examining the foundational reasons behind institutional crypto adoption. 1. Hedging against inflation. One of the primary reasons institutions are entering the cryptocurrency market is to hedge against inflation. With fiat currencies facing devaluation due to monetary policies and economic uncertainty, institutions seek alternative stores of value. Awareness of macroeconomic trends, currency weakness, and global financial pressures informs this strategy. Conceptually, cryptocurrencies like Bitcoin offer a limited supply, making them attractive as inflation-resistant assets. Institutions allocate capital to crypto holdings to preserve purchasing power while diversifying away from traditional currency risk. Observation of historical inflation cycles and asset performance reinforces the rationale behind these decisions. 2. Portfolio diversification. Institutional investors recognize the importance of diversification in mitigating portfolio risk. Adding cryptocurrency provides an uncorrelated asset class, reducing dependence on traditional investments such as stocks, bonds, or commodities. Awareness of correlation patterns and risk exposure guides allocation decisions. Conceptually, crypto offers a way to enhance portfolio resilience against market downturns. Institutions strategically integrate digital assets to maintain balance and reduce concentration risk. Observation of historical asset behavior supports the value of diversification. Knowledge of diversification principles provides insight into why institutional buying often coincides with broader market strategies. 3. Access to emerging technology. Institutions are investing in cryptocurrency not only for financial returns, but also for access to emerging blockchain technology. Awareness of decentralized finance, smart contracts, and tokenization informs strategic adoption. Conceptually, exposure to blockchain ecosystems allows institutions to explore innovative applications in payments, settlement, and asset management. Knowledge of technological trends drives institutional confidence and positions them for early adoption advantages. Observation of partnerships, development progress, and regulatory compliance informs strategic decisions. Awareness of blockchain utility provides a rationale for institutional entry beyond speculation. Institutions view crypto as a bridge to advanced digital infrastructures. Knowledge of this motivation helps individual investors interpret buying behavior. 4. Long-term growth potential. Institutions are increasingly attracted by the long-term growth potential of cryptocurrencies. Awareness of historical performance, adoption trends, and market maturation informs strategic planning. Conceptually, digital assets represent emerging sectors with high scalability and global relevance. Institutions allocate capital to capitalize on growth opportunities while maintaining diversified exposure. Observation of market cycles, adoption metrics, and technological development supports confidence in sustained growth. Knowledge of long-term macro trends helps participants understand the rationale behind institutional purchases. Awareness of growth potential encourages disciplined participation rather than reactionary trading. 5. Regulatory clarity and acceptance. Recent progress in regulatory clarity has encouraged institutional participation. Awareness of compliance requirements, licensing, and reporting standards reduces perceived legal risk. Conceptually, clearer regulation provides confidence in market integrity and operational stability. Institutions are more willing to allocate capital when frameworks are established for custody, trading, and taxation. Knowledge of legal and regulatory developments informs strategic decisions. Observation of regulatory announcements, exchange licensing, and government statements reinforces market confidence. Awareness of regulatory clarity explains why institutional buying is accelerating now. Conceptual understanding emphasizes the importance of security, accountability, and legal safeguards. 6. Institutional infrastructure and custody. Institutions are investing in cryptocurrency as reliable infrastructure becomes more widely available. Awareness of secure custody solutions, insurance coverage, and enterprise-grade trading platforms enhances confidence. Conceptually, access to professional infrastructure reduces operational risk and enables scalable participation. Knowledge of custodial options, cold storage, and multi-signature wallets informs strategic allocation. Observation of exchange partnerships and custody solutions provides insight into institutional risk management. Awareness of infrastructure reliability explains the timing and volume of institutional purchases. Conceptual understanding emphasizes the connection between operational security and market entry. 7. Market timing and strategic entry. Institutions often buy cryptocurrency based on strategic timing rather than short-term speculation. Awareness of macroeconomic conditions, interest rate trends, and market sentiment informs entry points. Conceptually, institutions evaluate risk-adjusted returns and plan allocations to optimize long-term performance. Observation of historical price patterns, liquidity conditions, and trading volumes guides tactical decisions. Knowledge of strategic entry principles explains why institutional buying often appears coordinated. Awareness of market timing enhances understanding of broader market movements. Conceptual insight emphasizes that institutions prioritize structured, informed decisions. Strategic positioning reduces vulnerability to volatility while maintaining growth potential. 8. Influence on market liquidity. Institutional buying significantly impacts market liquidity, creating both opportunities and challenges. Awareness of trading volumes, order book depth, and exchange activity informs risk management. Conceptually, large-scale purchases can stabilize prices by increasing liquidity, but they may also create temporary imbalances. Knowledge of liquidity patterns helps participants interpret market signals. Observation of exchange flows and institutional trades provides insight into supply and demand dynamics. Awareness of liquidity influence clarifies price movement drivers during periods of heavy institutional activity. Conceptual understanding emphasizes that liquidity effects are both immediate and structural. Institutions monitor and adjust positions carefully to minimize disruption while ensuring market efficiency. 9. Signaling confidence and adoption. Institutional buying signals confidence in cryptocurrency as an asset class and encourages broader adoption. Awareness of market perception, media coverage, and peer influence informs strategic interpretation. Conceptually, large investments from respected institutions indicate long-term trust and legitimacy. Knowledge of signaling effects helps participants understand why market sentiment often improves following institutional entry. Observation of announcements, filings, and partnership activities reveals intentional signaling strategies. Awareness of confidence signaling clarifies market behavior during periods of increased institutional participation. Conceptual understanding emphasizes the psychological and informational influence of institutions. 10. Positioning for future growth. Institutions invest in cryptocurrency to position themselves for future growth opportunities. Awareness of emerging technologies, evolving adoption trends, and macroeconomic shifts informs forward-looking strategy. Conceptually, strategic positioning ensures that institutions benefit from technological and market evolution. Knowledge of potential innovation, scaling solutions, and infrastructure development guides long-term allocation decisions. Observation of early-stage investment, ecosystem support, and strategic partnerships reinforces proactive engagement. Awareness of future-focused motives clarifies why institutional purchases are often gradual yet deliberate. Institutional buying in cryptocurrency is driven by a combination of strategic, financial, and technological motives. Awareness of these factors allows participants to interpret market movements, anticipate trends, and make informed decisions. Share this video with others to highlight the importance of understanding institutional influence. Comment below which motivation you find most compelling and how it affects your approach to crypto investing. Press the like button if you found this video informative, subscribe for more educational insights on cryptocurrency, and activate the notification bell to stay updated. Remember, knowledge, observation, and strategic thinking are your strongest tools in navigating crypto markets responsibly. Understanding the real reasons institutions are buying